Hi, this is CF Liu. Welcome to my channel. If this is your first time here, then you might want to stay until the end of this video, because in this lesson, I'm going to actually share with you, or even if you are very new in stocks investing or any investing for that matter, I'm going to share with you the 4 questions that you want to ask when you want to choose what to invest in. Now, the best way to actually do this is not to say the investment is provided by which company or whether it's recommended by your friend, someone that you know, and things like that. No. When it comes to investment, it's solely your decision. And when I say that it's solely your decision, meaning that your thought process must be right, must be correct. And a lot of people try to overcomplicate things when it comes to really choosing what to invest in. But in my years of managing clients' investment and also my own experience, I would say that really the question to ask, it boils down to these 4 questions. Now, if you're a beginner, you might find this very useful because this simplifying things without oversimplifying. But if you're a veteran, this serves as a reminder to say that you do not need to really complicate things. And why I say so. So number 1, the question that you want to ask is that this word is called growth. G-R-O-W-T-H. You have to ask the question to say, hey, is there any growth in this investment? Is my investment growing? Not in terms of the price or whatever principal amount. It means that the underlying asset or the underlying business that's generating revenue, is the revenue growing or not? What are the likelihood of this revenue will be still growing year on year? Okay, so the number 1 question is there any growth? Because anything that is growing when it comes to investment, well, it will cause the asset price, the underlying asset price, for example, the value of these stocks or company, and ultimately the price of this company, the price of this stock to actually go up. So if it's not growing, then you can know that whatever prices that they are at, even though now currently is very high, it would not be sustainable. So number 1 question is there any growth? And the other question to ask is inflation. Now, what do you mean by that? It means that if you were to actually invest into something, you want to understand that is the revenue of this business, okay, or the revenue generated from a company for this business, is it correlated with inflation? Meaning that because inflation is something that will keep on growing, right? Whether it's grow slowly or whether it grow fast, it depends. But basically, if the revenue of the company or the profit of the company is positively correlated with inflation, meaning that when there's an inflation, the revenue generated from there, it moves in the same direction as how the inflation moves. It means if the inflation go up, then the revenue generated or the profit generated also goes up in tandem. And then you know that when it comes to this trend, when the revenue is actually positively correlated to the inflation growth, which is confirmed, inflation anywhere in the world will be growing except a few countries which is having deflation, but that is another discussion for another day. So the thing you want to ask is, you want to think whether the revenue is actually positively correlated with inflation or not. And number 3 is that you want to understand that is there anything that that is beyond the company control, any events, any scenario that is beyond the company control, that can potentially affect the revenue growth or potentially affect the amount of profit they are generating, and all things like that. So meaning that if a business is very vulnerable to a lot of external factors, that even if you put the best CEO or the management team into it, and even with the best people in the world cannot really manage or control some of those external factors, right? Beyond company control, external. If there is something that is beyond the control of the company, that even if you put the best resources of the people to actually manage this kind of risk, and then even the best people cannot really control this external factor which will be affecting their profit or revenue, then you know that you also want to be very careful, and if can try to not invest in this kind of sector or in this kind of business or company. So this is the third question. Now the fourth question that you might want to ask also, is this company actually prone to any political event or not? What we know as a political risk. Now political risk means if the revenue of this generated by this company is affected when there is a change of a ruling regime, or there's a change of a government, a change of a company not company policy, a change in the government policy. So how badly will the business side of things of these stocks or this company be affected? This is what we are talking about, political risk. So as a newbie or even as a veteran, right, sometimes people get too overcomplicated about what are the financial statement and all that. I mean, that is important, don't get me wrong, but it boils down to asking these four questions, very basic common sense question. Is the revenue always growing, always be growing? Okay, now I'm not only talking about one company, because as a general the entire sector must be growing. For example, in that sector or that industry there might be 5 companies, and over time maybe the top 2 company will actually go into a merger or acquisition of another smaller company, and they become the 2 big player and eliminating all the competitors. Now that is fine, that is still a good sector to invest in, don't get me wrong, right? You just have to say that you don't place all your bets into this one company, so instead you want to place your bets in the sector itself, right? So no matter company A wins or company B wins or company C wins in this, they are fighting each other within this sector, you know that you will, no matter what, you still make money, is because, or still be profitable because the entire sector is growing. And if the entire sector is also positively correlated with inflation, I mean inflation, in other words, impact them positively, that is even a good thing, because if inflation actually impacts them negatively, then that is a bad thing. And the third is beyond. Is there any things that actually is beyond any external factor that is beyond or outside of the company control, even with the best management team? If there are external factor that actually affects a company revenue which they cannot control, then that is another a red sign or red flag. And of course political risk, right? Political risk, but the thing is, I want to actually jump on to what are the available sector in this in Malaysia, Bursa Malaysia. I just want to actually jump to this and show you what I meant by this. Okay, so alright, so what happened is I'm going to jump to here, and I'm just going to show you, if you are new into this, depending on the trading platform that you are using, you might be able to see or filter by the different sector, right? Every sector has its own stocks or company that you can filter, and whether you have this platform that can filter this so user friendly, it depends. But for this, I'm going to explain more what I mean by that. Now you know that when it comes to main market, okay, just go to main market. Now there's this different sector, right? When it comes to investing into stocks and whatnot, you see that. Now let's go through this one by one. When it comes to consumer product and services, it's further broken down into agriculture, automotive, consumer goods, food and beverage, household goods, personal goods, retailers, and travel and leisure. So jump back to our question, is that for consumer product and services, will there be any growth? I think that for certain, as the population, the population is growing, then, or the country is growing, then there is a demand for more consumer goods. So in that sense, I would say consumer product or services are growing, but whether they are correlated positively with inflation, now that's another thing. And if you can see that you know, food and beverage, all these are necessity items. Yes, people might need this for the day-to-day living, but when really inflation, I mean, imagine the food prices suddenly jump up by 10 times. So people are going to spend less, right? Because they do not have that kind of spending power. So number two question, the checklist number two is to say that inflation, when it comes to these consumer product and goods and service, is probably not positively correlated with inflation. Okay, household goods and all that. So the third question we always ask is that is there anything that is beyond this control, beyond the company or business in the consumer product and service industry? Any things that is beyond their control? I mean, certainly yes. Like when it comes to any goods, right, consumer goods, you know, you need this raw material to actually make the goods. So this raw material, something that is beyond control, because this raw material might have an increase in prices in this raw material, and therefore you might not be able, you know, when your cost to manufacture a material actually increases, so you have no choice, right, but to actually pass this cost increase to the consumer. Okay, so that you can do, but to an extent that I think if you pass the cost fully, and to an extent that consumer are not able or cannot afford to buy, then that is also a bad thing. So you are not able to actually get more business, I mean sell more. So in that sense, for a lot of business, especially in the very competitive consumer product and services space, they realize that sometimes when the raw material of the goods increase, they have to actually absorb part of it themselves, and therefore they would have a decreased margin or decreased profit. So if they are in this kind of scenario, then you know that if you already invested in, maybe it's time to just switch out. If you have not invested in, and you better not invest into that, right? And for some things like agriculture product, it could be things like correlated also with commodity prices, or when it comes to agriculture product, things like the weather and all that might also affect the output of agricultural product, which affects the revenue. So these are the factors when it comes to the climate, when it comes to the weather. It is really something that is beyond control. So question number 3 is also is a yes for consumer goods, and some of the consumer goods, right? So you know that out of these 3 we discussed so far, they are actually very vulnerable to factors that external factor beyond their control, the business control. And the third one, and the second one would be when it comes to this inflation positively correlated. So they are really not, they are maybe partially positively correlated with inflation, but in most cases they would have a decreased margin because they just are not able to pass fully the cost, the hike in the cost to manufacture or to make that goods or consumer goods or product to the consumer. So you can see that even if you can see what are some of the company over here that we can talk about, like, you know, Kamda, Napadini, clothes and garment. Especially for garments, people might just buy less if, you know, or this to me is even, you know, these are aspirational purchase like gold and all that. Now let's move on to this one, main market and industrial product. Industrial product, in my opinion, is a bit better because as long as their end customer are businesses in industrial product, and normally B2B, we are talking about business like building materials, chemical, diversified industry, industrial engineering, you know, the piping and all that, or there are so many things that you and I even don't know about that makes up, you know, the buildings or the infrastructure and all that. So it's one of the most resilient sector, even though we're doing recession, as long as the country is developing. Okay, so in terms of whether they're inflation correlated, well, it's not directly correlated, but when it comes to as long as it is development in this country, in any country or any region, then you know that the companies supply this kind of industrial product or goods to these businesses will be profitable. But in terms of growth, well, like I say, as long as the economy is growing, or even if the economy is not growing, imagine in Malaysia the economy is stagnant, but some of these companies, if they are able to actually say do an export, so they're able to actually export out and they find a new market outside of Malaysia, maybe Vietnam and all these countries whereby they have customers overseas who are still having this building, or maybe China, then you know that there's still growth over there. In terms of whether there's external factor affecting these industrial product and services, now you know that external factor when it comes to this industrial, and it's very likely this industrial services or product, they also need a lot of these material like gold or metal and everything like that, so to actually also manufacture. So to a certain extent, the material, I think the raw material they are used to make the industrial product is also something that they are not able to control fully. So there will be some vulnerability over there. But in terms of political risk, on the first layer, when we think of it, might be not prone to any political risk. However, just think of it that way. Like in Malaysia, you know that when there's this change of government, and you know, with the new government, they actually postpone or actually cancel a lot of those huge construction contract that is underway or want to start. So basically, this company who actually have this so-called involved in this project, suddenly they would see that like this project there's a U-turn, so they cannot actually make profit out of it when there's a lot of project that is being cancelled by the government. So this is a second level of analysis you have to think about, because since it happened already, I can share with you, but the political risk is always there when it's come to this industrial product, especially it relates to an industry that depends on, let's say, government project or government infrastructure. Same as construction also. For construction, you know that, well, construction infrastructure, what are the largest project or the most profitable project is almost always from government, right? Of course, private sector, if you have that, is good, but these are also same concept that I want to talk about when it comes to this construction sector and this industrial. A lot of this construction sector could be political correlated, high possibility, not a must. There are a lot of external factor cannot control, and whether there's a growth or not, it depends on the general economy. So you can see how that relates over here. Now, technology company is a pretty interesting, because everyone is talking about technology, but you know that technology company is it's a bit it depends. Okay, for example, we are talking about, let's say we are talking about semiconductor, right? What happened in semiconductor? You know, semiconductor is always a very cyclical industry. There's an up and down, and there's an up and down. And in modern day, this semiconductor is still on the uptrend at the time. In most of the cases, because you know, electric car, you know, it is this smartphone and all that, this electronic components and all that. So there's a lot of growth over there. When it comes to inflation correlated, I think it is not that applicable as long as this technology they are making goods or services that is affordable for a lot of consumers. As you know, they are not inflation correlated, because even though our handphone, for example, smartphone, are getting more and more advanced, this is not really getting much and much unaffordable. Of course, there is certain things like, you know, iPhone 10 XS and all that cost you like 5,000-6,000 a pop. However, when we talk about you just want a very simple affordable phone, and it's not unaffordable, right? Just could get one smartphone for 500-600, a very decent one. But when it comes to digital service, you know, the software and all that, now there's another different matter, because we have seen cases like company like MyEG, they actually have this you know, driving license renewal, road test renewal online, But the main driver of let's say MyEG, the company, is basically depending on a lot of these government contract, government system correlated. For example, in Malaysia, once a new government take over, they say that we are going to discontinue the GST GST system. And then this MyEG as a company, they initially have this huge revenue or contract coming because they are actually having this government contract to do this GST goods and service tax monitoring system. But now after that is no longer the case because the whole GST system was being scrapped. So that technology company, you have to look at second level deeper to see whether some of these their business, what is the nature of that. It depends on the private sector or the public sector. If it's a public sector, then that government policy can change anytime when there's a change of a minister and whatnot, which could make your investment actually go the other way, where you expect it to go uphill. So yes, technology generally, yes, there's growth, but there's a there's a risk over there when it comes to political risk. The other thing, how about things that beyond control? Well, there are a few things that is also beyond control when it comes to technology, and that it's generally a very competitive business. There's a low barrier of entry. Now that there's a lot of, if you talk about one kind of software, right? One kind of software. So people can just develop a software. Imagine you have Uber and Grab, and even though it is impossible for any Tom, Dick, and Harry to actually start a software company, but that this is not really a monopoly. There is really, in this age, I think, as long as you have the right people and the right skill, this actually very what I call as a low barrier of entry when it comes to starting a technology company. And then some of these, when your technology actually go obsolete, that is where a newer technology company will actually overtake you. So yes, there are these factors also beyond your control. That's why you always need to be, for any technology company, it always to be in a constant evolution on change. So if the company is, you notice if the management or the company direction is always doing that, then that could be a good thing. If not, then that this company is going to go downhill. For example, BlackBerry by Research and Motion, right? Or some technology company like Nokia. They are the dominant player, but end up they are being taken over by other more faster moving and more innovative company. So what else? Now, financial services is always the bellwether of the economy. Banking and insurance. Now, insurance, that insurance is almost always profitable, even though their expenses are actually insurance claim. That when there's insurance claims, insurance company always can say that I'm going to increase the premium across the board, or cost of insurance for all my existing and new customer. So in that sense, I think insurance company is always a very profitable business in the long term. So it is not really, it's almost a necessity. It's not prone to any political risk. I think it's not that much. There's always growth, so you can have two green light over there, and actually it's very inflation correlated, because if, let's say, for a medical insurance, if the medical cost increase due to medical inflation, when you buy a medical card, they can say that now the medical card actually costs higher compared to 10 years ago. So it's a 3 ticks over here, right? Just jump back to here, 3 ticks. But anything beyond company control, business control, when it comes to insurance, that there's one thing, I'm not sure if you notice, when it comes to insurance, because insurance and banking are very regulated. Okay, they are actually there's a lot of compliance, and there is a very regulated industry, maybe by the central bank or by Security Commission and all that. Even for banks, right, they are very regulated. So if for banks, one of their main revenue driver is a mortgage loan. So let's say the central bank have to increase or decrease, right? Or normally, let's say decrease their interest rate because to spur more spending, to boost up the economy. And then based on central bank do this based on the whole entire global economic outlook. So when they do this, you know that banks is beyond their control. I mean, they cannot say that I don't want to decrease my interest rate for my loan. If not, your product cannot sell in the market. It's no longer competitive. So in that case, this is a factor beyond a bank's banking company stops control. Same like, you know, for insurance, if they just impose, I have no example, but just impose some rules or guidelines that you have to follow that will potentially impact the revenue of the insurance company. So no choice, they just have to adapt and just you know, follow what is the guideline being imposed by the regulator. So that is the thing. And now moving on for property sector, and you know the property sector it is always a very interesting sector because we are talking about property investment as well, right? What happened is property sector that, you know, that developer now they are really when it comes to oversupply of residential property, you know that there's a multiple research or data showing that you know, if certain developer having hard time letting their property go, so they under table, I think they have this engagement with a lot of investment clubs, or even, you know, like bulk purchase and all that, so just to get their property, you know, inventory, I mean moving and things like that. So property sector is not a easy sector. If you bank on the right developer that really can get their property more and more property sold, because they just have this product or property that actually suits what the market needs. What the market needs is, again, this affordable property, but what the market can afford is also affordable. But what the property developer like to build is actually luxury property, because probably there's a higher margin over there. So you know that property sector is really not easy unless, so there's a factor that you cannot control. For example, the reason people can buy property is that they're able to get a house loan or the mortgage loan. If they are not able to get a mortgage loan because their income is not strong, their credit record is really koyak already, basically the desire to buy a property is there, but they just cannot get a loan to buy a property. So this is the factor that is none of the developer fault, but again, these are the things what I mentioned over here, they cannot control. And when it comes to political risk, again, you know, government or central bank can impose things like now it's not really a political risk, but it's more of a policy change, right? You know that back in the days, there's things this called, for property, that's called developer interest bearing scheme, right? So everyone can just pay a certain 10%, and then during construction of that property they don't need to pay anything. But that story no longer valid since like 2013 and things like that. So when there's a change of policy, when I say political risk, is not only change of government. When it change of government policy, this property market slow, because people like cannot just go on a buying spree for this property. So you know that there's a lot of factors beyond control. They are prone to this policy change, political risk. The good thing is property prices, they say they always go up because they are positively correlated with inflation, but affordability, for this case, they are driving things down. Okay, because desire is there to buy a property, but affordability has become a huge issue. Of course, with population growth in major cities like Penang, KL, JB, there's always a potential growth. But like I say, property is not exactly you are buying vegetables from the market. It's a huge commitment which needs a loan. People cannot get loan, they are not able to buy a property. So we just talk about this property, jump to this plantation. Now plantation is the thing that I have no exposure unless you're in this field. Plantation, basically I'm talking about palm oil, which is correlated with this so-called commodity prices. So even though, you know, your company is perfect, you do everything right, but then when the commodity prices actually drop, you will actually feel the effect as well. So it's the same that I could say for energy sector. You know, let's talk about oil and gas, which is a commodity prices. So I don't like that because it violates number 3. It's not beyond, it's a factor that is beyond the company what they can control, which affect their revenue. So Political risk, maybe less, because the major risk over here is actually this external factor, commodity prices beyond their control. Inflation, probably not. This is again whatever impact of growth and inflation it has when it comes to commodity prices, actually very negligible. That's what I thought. Now if you have a different thought, comments below, and click like and comments below. So moving on, this is okay, main market, and plantation, whatnot, and closed-ended fund. Okay, main market, let's look at this. Energy, okay, energy, we talk about this. Healthcare, also very resilient, because no matter what, people value their life. If healthcare, we are talking about company that produce health equipment, or even like hospital, listed hospital group. I think that is one of the most resilient that you can invest in for healthcare. Okay, if this is your cup of tea, you might want to actually look at this, because if you jump back to this one, growth, and there's a growth, of course there's a growth, right? Because healthcare, they are getting more and more expensive. In terms of inflation, yes, because there's a medical inflation. So for healthcare, these are two ticks. Okay, and then is there anything beyond the company control, or this healthcare company control? I would say that yes, but compared to, let's say, for consumer goods, right? Basically for healthcare, I think to a certain extent you can pass more of the increase in cost, right? That is beyond your control. You can pass that to the end consumer. Okay, I think this is the beauty about healthcare. Too bad, I mean, for us it's no good, but for business standpoint, I think it's good, because even though the external factor beyond your control, they can just pass that over to the end user. And how about political risk? I think political risk is a lot less when it comes to healthcare. I can't think of any when there will be a significant political risk. Even though there will be, the impact will be quite negligible. And moving on to this one, telecommunication and media, and the first stocks or the company come in mind is that Astro, the satellite TV broadcaster. It used to be the monopoly, but now because of the technology change, now people actually watch YouTube, like what you are watching over here. People actually watch YouTube more than TV, where is the advertising dollar are being spent online for digital marketing rather than pay for TV. That is why I think for traditional media and broadcasting company, they're actually going downhill. If they don't evolve, I think they'll be wiped out. But the other thing is telecommunication. We also talk about like company like telecom, right? TM, right? TM. And what happened with TM is that it's bad because it's not inflation correlated, and because there's a lot of competition when it comes to broadband prices. You know that TM, they are not actually the cheapest. They almost are the monopoly. But again, the new minister, telecom minister, actually from the Pakatan government, actually come take over in 2018, and they say that we are going to reduce broadband prices across the board, and this is what the government want. So for a company like TM, this is what we call also a political risk. There's a change of policy. You have to comply, no choice. Right, so so that is the thing. So for me, it's policy change. They are very vulnerable to that. Is there any growth or not when it comes to this? Of course there is growth, but because of this blanket policy change, that makes it very not so desirable at this point of time. All right, or any foreseeable future to actually invest in this telecommunication company. And when it comes to like Maxis and Digi and all that, you know that if you look at the news, their subscriber base in Malaysia is almost like saturated. The only thing is every year one company report higher revenue than another. Is like the right pocket, left pocket kind of thing, because it's the same pool of customer. It's just that whether this year this telecommunication company can actually offer a better package that actually pull other consumer over from other company to them, not because there is a growing subscriber base. So if you understand that, and that is one of the reason, even though some of these companies still give very good dividends and all that, but when it comes to growth and long-term prospect, it will be quite limited. Of course, with the coming new technology like 5G, maybe 6G or 7G, and all those technology will potentially drive growth. But I do not think that when it comes to this, they are going to like a major growth, like compared to other things like healthcare, right? So if you only have like a certain sum of money, you always want to put it in the one that can generate the highest growth. Not to say that you just do diversification for the sake of diversify. You put it some here, some are mediocre, some are just okay. We just want to focus on what take this perspective, my perspective over here, and just focus on what you really you really think it is most beneficial, that can get you the most return when it comes to investment. Transportation and logistics, we are talking about company like, now this is surprising, it is a so-called boring sector, where when you come to it, you look at company like maybe like GDEX and all that. So they are transportation company, but you have to look at the second layer. Their revenue growth is actually driven by the upcoming growing e-commerce business, because e-commerce is an online thing, but still you actually need what you actually still need those what we call of last mile delivery to deliver the goods to the consumer, which means that you have goods from where else, you just have from other country or from Malaysia, you just put the goods into one warehouse, and then that warehouse or logistics center, they have to distribute the goods. So when the volume of e-commerce is going up, so the volume of transaction when it comes to delivery and sending will also go up. So this is why like POS Malaysia is a bit I have some reservation on that, because really their model is still, they have this brick and mortar, like POS Malaysia branches and all that, post office. But when it comes to GDEX, they are like pure delivery business, and they're expanding overseas. I know because I'm also using one. It's one of the major logistic provider in Malaysia, and that is why there's a huge potential of growth over here. Whether they are prone to what I call as political risk, I cannot think of any as of now, but they certainly have a high growth. They certainly are they are not really inflation correlated, because that the cost to send a courier package, it doesn't really vary too much between one provider to another. You cannot claim yourself just a premium and charge more. So it's the price, really there's not much inflation, but the growth is driven by a lot of people actually buying things online. Therefore they need this to be delivered to homes, to people and all that. Anything beyond the company control, yes, I guess that delivery, you are talking about fuel costs, right? Your petrol and all that. Now if there is this commodity price, the oil price increase, well, that is a bad thing for these people who are running transportation or logistics services, or even airline. But if that is the thing, even though I mean, they can do like hedging and all that, but that these are the things that I would say that there's a factor to say that even though how good the company is run, for transportation and logistics company, there are external factors that's beyond their control. So moving on to here, search by sector, and go to here. What else we have not covered? We have covered this. Now utility company also, I think utility mostly they are monopoly company, because you do not really see, like at least in Malaysia, like more than one company that can provide electricity. Is only like Tenaga Nasional, right? So when it comes to this, I think the monopoly helps in terms of their revenue growth. But however, whether they are able, let's say for example, they want to increase electricity tariff, I think to a certain extent they cannot say like that, just increase like overnight. They have to, the minister or the government, to a certain extent, the Prime Minister of Power Energy or something, have a certain say to that, and they have to go to cabinet. So it's sort of also politically sort of not maybe indirectly related, right? Whether there's anything beyond company control, yes. If whatever things they are using to actually maintain their power grid and all that, if the cost on that part increase, then you know that that will actually impact their top and bottom line as well. So again, this is utility company. Even though there's a monopoly, you know that this is actually not an easy business. We are talking about huge infrastructure over here, and of course, inflation correlated or not, if they can increase, they can pass on the cost to the consumer with, again, the nod and approval to a certain extent, the policy maker. So that being said, I think we've covered everything that you have over here, with one exception. We're talking about real estate investment trust, which is I saved the best for the last, because if you look at real estate investment trust, whether there's growth or not, of course there is growth. We are talking about real estate. We are talking about commercial property. As long as the business environment is thriving in any country, you know that there's always a need for commercial real estate. Anywhere, especially in big city, there's growth. Yes, inflation, you know that rental is always correlated with inflation. And when we are talking about not residential real estate, we are talking about commercial real estate property. That is where we are normally talking about, referring to a business to business, B2B kind of transaction. And you know that this kind of transaction, whereby if let's say you are the commercial real estate property owner, as long as your tenant doing business is doing good, it can pay you a lot of money. Even you charge him more every month or every year, they'll be more willing to pay more if it's in a hot location where they are generating more revenue. So they are positively correlated with inflation. They have growth. Is there anything beyond real estate investment trust control, external factor affecting them? Well, maybe some, like interest rate and all that, but they have a way to actually mitigate what we call as a capital management. They have a lot of ways to actually say a fixed interest rate. They take these fixed interest rate loans, or they can actually raise capital raising, like equity capital raising, or even bond or debt, debt financing, to actually reduce the uncertainty. So in terms of uncertainty, external factor beyond the company control, which means that is this uncertainty, right? For real estate investment trust, you know that there's a lot less uncertainty that can actually affect their revenue, because the one thing certain, they are not property developer. They are holding commercial property. Almost 90% of them is of the revenue for real estate investment trusts are actually rental. Okay, pure rental. When it comes about rental, that is very stable, very steady. I cannot think of any political risk that would be affecting real estate investment trust. Not that much, because no matter what, we have proven that, like in Malaysia, 60 over years of regime change, a change of government, business still go on as usual. Okay, maybe some business will do bad. I mean, maybe some business will do good, but whatever happen, you still need a place or premise to operate your business. And when it comes to real estate investment trust, you have like retail mall. No matter what government is going to take over, the retail mall are still there. No matter which government or what policy maker, you still need the buildings to actually run your whatever operation, whether it's government related or public sector operation. So they are really not affected by political risk. And which is why, if you want to start, right, you want to start about the sector which is the safest to start with, because you don't want to be traumatized. Imagine if you just straight invest in plantation stock, and tomorrow the oil palm price drop, and then the company that you invest in, the price drop, you are going to get shocked and say, well, this happened, I'm just unlucky. But actually it's not. It's about selecting the sector with the least amount of uncertainty, with the best growth potential, which is positively correlated with inflation, and then you know that you will be able to actually sustain your investment and grow it from there. Just start small and grow it bigger and bigger from there. So I hope this lesson give you an even more comprehensive review of all the sector in Malaysia, and what are the things that you should ask, simplify things you should ask to say before you invest into something, okay, or anything, okay, this mental process. So if you like this you like this lesson, just give it a like. You know, have question, just comments below, right? Just comments below. And if you have any, you know, any doubt and whatnot, just comments below. And there's a link, you know, there's these words that is running. I think if you want to join, you want to maybe want to register, you've got time, register for free upcoming web class. I'm going to conduct something that I talk over here, but it's a live web class that you can share more about what are the safest. Like I said, real estate investment trust is my specialty. You may want to invest into that, basically I provide a free web class. If you are interested, you can actually click on the link below in the description box, and then secure a spot, just book a place. Otherwise, no worries, you always can, you know, check out this video later, and you know, if you are more interested to watch the next lesson here, then you can just click on that. Or and last thing is don't forget to subscribe to this channel. Click like and hit subscribe, and I will see you in the next lesson. Okay, you have a good day.